Hi, Hugh Lopdell here from Oak Park Chartered Accountants. This is a follow-up to my video last week on COVID-related small business issues. There have been in particular some important changes to government assistance, which I want to tell you about. Again, if you're a pharmacist, I'm doing a special video just for you, so keep your eye open for that. The wage subsidy. Now, most of our clients who applied for this have claimed it. Your turnover had to be down 30% to qualify. The requirement to do your best to pay your staff 80% of normal pay remains. But the website now specifically states that if you can't, you can just pay on the subsidy. Remember, as I said in the last video, you need a written agreement with your staff to change their pay, and you must decide if that $585 is net or gross and account for the tax accordingly. Now, clawback. I mentioned in my video there's no clawback of the subsidy. There are now guidelines on the Work and Income website about this. One or two clients of ours have realised they claimed the wage subsidy in error. Either they claimed it when they just didn't qualify because their income wasn't down 30%, or two, they claimed it but then have since realised they need to lay off staff, and therefore, because they haven't kept them employed, they don't qualify for the wage subsidy. The website now requires that in those and some other cases you do repay an appropriate portion of the subsidy. There's still no advice on the Work and Income website that if this is all over in 6 weeks and we're back to work, that the government's going to want back the remainder of the 12-week subsidy they've paid you. I'll let you know if that changes. All right, rent. We have heard some good stories and some not so good stories about landlords and how they're responding. A lot of landlords, I would say most I've heard of, have come to the party and given either a rent holiday or a 50% reduction or a 30% reduction in commercial rent. Some have allowed a deferment so you catch up later. One landlord I've heard of is not budging at all and just requiring the tenant to just keep up with normal payments. Go and get a loan if they need to. That hard-nosed approach is not one I'd advise if you're a landlord. If you're a landlord, you're a business person. And setting aside what's moral, is that a good business decision to hold your ground? Business relationships are still relationships, and goodwill is like the oil that smooths the running of your business. So the loss of goodwill with your tenants from taking a hard-nosed approach could bite a commercial landlord down the track. Okay, tax relief. Now, in my last video, I did raise this. There are 3 big tax payments, aren't there, at this time of year? One of them due today. If you are late paying your income tax or GST or PAYE at this time, Inland Revenue will, on application, remit all your late payment penalties and interest. That has never happened before, so this is a real help to businesses at this time of year. If you are thinking of asking for an instalment arrangement, phone access to IRD is very limited at the moment. My recommendation to our clients is if you can't pay your tax, rather than ask for an instalment arrangement at the moment, just pay the tax when you can and then call us and ask us to request remission of penalties and interest for you. We're not charging for that service. KiwiSaver. Now, this is more for staff of employers than employers themselves. Now, contribution holidays of up to a year or an extreme hardship complete withdrawal from KiwiSaver is still available. Staff must apply in both cases to the KiwiSaver provider, not to the employer. I'm picking it with most employees receiving at least the wage subsidy passed on of $585, and very few are going to be able to justify extreme hardship. On the other, a holiday amounting to just 3% of your gross pay is probably not going to make enough difference to make it worthwhile doing. Something to remind your staff about too is money they contribute to KiwiSaver, if they're in a growth fund particularly, is being invested at the moment at very low share prices. Just on that, in regards to the woeful appearance of your KiwiSaver account, my advice is don't look at your KiwiSaver account. If you're like me and you've got enough grey hairs to remember 1987 and other times when the markets have crashed, when the cloud lifts, the market recovers. Don't look too closely at the balance. It'll come back. Okay, mortgage holidays. Now, I did cover this in my last video. Just to clarify, I advised that if in doubt, apply for the 6-month mortgage holiday. If you find out, say, 3 months down the track, you don't need it anymore, you can end it early. Or another way is just keep the cash aside that you're saving from the holiday. And if you find out down the track you didn't need it after all, you can make a bulk repayment of the interest and the principal that you haven't been paying at the end of the holiday. And you'll pretty much, not exactly, but pretty much restore your loan to where it was. No big, horrible interest growth for the remainder term of your loan. All right, consider efficiencies. Now, this is a little different. This is an opportunities thing. So you're sitting at home, not able to open your doors and watching your business bank balance go down and thinking about what will happen when the doors open again. If there is a poor performing part of your business, this shutdown will have exposed it, right? Perhaps your rosters could operate more efficiently. You may have staff employed in a role or function. You're still paying them while the doors are shut, but because you're paying them and they're getting nothing done, it's more acute and you're wondering whether you should even continue that role when the doors open again. Now is a very good time to sort that sort of thing out, so that when your doors do open, you're more efficient, you're leaner, you're meaner, and more profitable than you were. You need to be careful about redundancies. I covered that in my last video, but give me a call if you want to look at options for dealing with that. Again, help of that kind at this time is at no charge to our clients. Now, budgets. Just a reminder that we are offering free help with any of our clients in regards to preparing a budget. A number of our clients have taken up on that, just a small number. If your turnover is down dramatically, and particularly if there's uncertainty about how quickly your type of business is going to spring back once you open the doors again, budget is a very, very good idea. It can be amended over and over as perhaps the lockdown is lengthened, or when the doors do open again, your pickup in trade is not quite what you thought it would be. You can keep amending it, and in uncertainty, it can be an extremely useful tool because it's flexible and you can modify it as situations change. All right, now at the end of last week, the government proposed some changes to insolvency laws, and I'm going to go over this quickly because it might be a bit complex, but if you're a director of a company, any company, big or small, you have certain legal duties of care in regards to trading while you're insolvent. Insolvency meaning you can't pay your bills as they fall due. Now, the government has is putting in place some measures to protect directors from any actions creditors may take if you as a director continue to trade while you're insolvent and therefore breach certain duties you have. Now, if in good faith you, as directors, state that you were solvent at Christmas 19 and you'll be solvent as best as you can see in 18 months' time, once passed this by Parliament, the amendments will give a safe harbour to directors to protect them from certain legal duties that would normally apply. Call me if you think that applies to you. All right, that's all I got for this week. All the best to everyone for coping and handling this crisis. Call us if you've got any queries. Hugh Lopdell from Oak Park Chartered Accountants signing off for now.